Yeah, good morning, everyone. So we saw yesterday US market showing positive trend, mainly driven by the economy data, which came softer. The S&P Global US Manufacturing PMI data came in at 49.9 versus expectation of 52 and last month 51.9. Less than 50 indicate that there is a degrowth. So the minor degrowth was observed, and that has impact on dollar index. The dollar index came down by almost around 50 basis point. And also, we had seen that with this decline, the expectation on interest rate cut has come forward. The earlier interest rate cut by the Fed was in September. Now it has been preponed by one meeting. So, that has led to US market moving up. Apart from that, even in the post market, Tesla result has come, though the results was below expectations. But the Tesla has given indication that they will be introducing cost competitive or lower price car in the market, and that has taken the stock up. Apart from that, few more results came in the US and which were positive. So now what we see that going forward, US market may be driven by the positive US results which have started coming. Apart from that, the Asian market has also shown positive trend, and most of the Asian markets are up into the trade. Uh, that will lead to even the Indian market also opening higher and may continue to move up. Apart from that, oil has further moved up by $1, and aluminum has seen some corrections. Yesterday, LME was down by around 3%, and that is leading to decline of around 1% in China today. So that has seen some corrections, and zinc was also yesterday down by around 1%. So quite possible that the base metal rally, which was there in last 15-20 days, is taking some rest, and we are seeing some corrections. So need to be careful in uh, metal stock, specifically Vedanta. Then iron ore is showing positive trend that is up by around 2.5%, and steel is up by around 0.5%. So ferrous metal, that is steel, is showing positive sign still, but the base metal is showing some softness. So overall seems positive trend for the day. And I'll request technical team to take up from here.
Thank you, sir. Very good morning, all of you. We have seen some flattish move in Nifty in yesterday's trading session. Nifty had opened flat, and it was more of a flattish move in yesterday's trading session. For today, we're expecting a positive movement in Nifty. We're expecting a gap up movement, and we can expect some positive move only above 22,450 levels, which is yesterday's high. If that is crossed, then we can expect higher levels up to 22,500 to 22,570. Whereas the downside support lies at 22,300. It will act as a very important support zone. If that is broken, then only we'll witness 20 to 200 levels. But more of it is more likely we'll be seeing an upside resistance. We'll be testing the upside resistance. Similar move was seen in Bank Nifty. Bank Nifty has shown a good sideways move in yesterday's trading session. But today, the immediate resistance where Bank Nifty will start moving will be at around 48,150 to 48,170. Only above that, then we can see a good rally in Bank Nifty, which can take Bank Nifty up to 48,340 to 48,550 levels, whereas the downside support for Bank Nifty lies at 47,870, followed by 47,740. Talking about Financial Nifty, close around 21,350. The upside level lies at 21,440 and 21,550, whereas the support for this index is at 21,300 and 21,200. Talking about stocks, we feel it's a stock specific market. Usually, we are seeing a good rally in mid cap stocks. CSE looking good at current levels can be bought for a target of 156 by keeping a strict stop loss of 138. Again, Devyani is looking good at current levels for a target of 174 by keeping a strict stop loss of 161. So that's all from my side. I request Nirav to take the call forward.
Yeah. Thank you, Ayush. On the derivative front, again the same thing. Not much change. The only thing really is noteworthy is the open interest has risen. Now, this being the expiry week, we will see some rise in open interest as rolls start to take place. Um, Another very important thing that happened was the VIX has fallen by 20% yesterday, and it has fallen up to the 10.2 odd levels. This is unprecedented because generally this doesn't happen so close to the elections, and whenever the election takes place, we have generally seen the VIX move up towards that 20 odd levels. Now it is around the 10 levels, so makes sense to go ahead and do a strategy which is benefited by the low VIX. The strategy that one can do for this month can be the long straddle, where one can look to buy the call and put of 20 to 400 strike for the 30 May expiry, with the VIX being at around 10. The premiums are low, and that will help the strategy moving forward. It can be a very low risk strategy at this point of time, so close to the elections, which can generate good profit. Now, the one thing to note here is the VIX has to move up from current levels in the next few days, and the only way it can move up is by seeing volatility on either end, sudden falls or sudden rise. So beware of sudden falls from 20 to 500 levels. 20 to 500 call also saw significant amount of open interest built up in yesterday's trading session, which does suggest some sort of resistance area. So 20 to 500, once Nifty comes to, you will see some sort of profit booking or selling pressure, which can see Nifty consolidating for a couple of days. But yeah, all in all, beware of that and keep strict stop losses for Nifty. From the stock specific front, banks did very well yesterday. Some of the banks did very well, and we continue to see the private banks participating on the this rally, and we believe private banks will continue to do well. Also, PSUs as a whole have seen good reversals. So, banking space is one such index where we feel some buying can come in the next few days. So look out for the same. Yeah, so that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. On the result side, ICICI Prudential life insurance result is below expectation. Although APE came above estimate at 3,600 crores, which was around 7 odd percent above expectation, and also grew 10% year on year. The value of new business came 10% below estimates and declined by 26% year on year, mainly because of decline in VNB margin, which came at 21.5% against expectation of 26%. This decline was due to increase in share of ULIP and decline in share of non-linked products. Also, there was a sharp increase in commission expenses. We expect growth to improve from FY25. Even APE growth in recent months has improved. Although from near-term perspective we are neutral, but in the long term we remain positive. 360 ONE Wealth Management result has improved. Average recurring revenue AUM increased by 6% sequentially, 35% year on year to 2,23,000 crores. Revenue grew 30% sequentially and 46% year on year. Much better than the ARR AUM growth. That is mainly because of one-time increase in the transactional and brokerage revenue, which increased by almost 100% on sequential as well as year-on-year basis. But if we look at the average recurring revenue, that component increased by 6% sequentially. So going forward, we feel that on a sustainable basis, profit can grow at 20 to 25% CAGR over next couple of years, and we are positive on 361. MCX, this was the first result where the software expenses paid to 63 Moons stopped, and this line item was normalized, resulting in a good jump in EBITDA. However, despite this, overall result was below expectation. Revenue came at 180 crores, which was down 5% sequentially against expectation of 204 crores. Monthly data had already indicated that F&O turnover was sluggish in recent months. Options premium average daily turnover increased by just 3% sequentially. And we have to keep in mind that the entire story of MCX is based on high growth in options, and in coming months it is important that it gains some momentum and bounces back strongly. Futures turnover was down 16% sequentially. Accordingly, EBITDA came at 102 crores versus expectation of 125 crores. Profit came at 88 crores against expectation of 108 crores. Looking at this result from near-term point of view, we are neutral and would suggest to monitor the monthly data closely for any signs of revival. Then, again, stock can come in momentum. Thank you.
Good morning. Tata Consumer Products has posted the result ahead of expectations. In terms of volume growth, India beverage business has seen the flat growth. India foods business has delivered 4% growth, and US coffee has delivered 6%. International tea business has seen hardly 1% of growth. Revenue grew by 8.5% on a YY basis at rupees 3,927 crore. Where the India foods business maintained its double-digit growth trajectory with 20% growth. During the quarter, gross margin increased by 230 basis points on a sequential basis. EBITDA margin reported 16% versus the expectation of 15.3%. During the quarter, there was an exceptional loss worth rupees 216 crore, which includes which includes the cost related to scheme of arrangement, asset write-down, acquisition, and fair value loss on financial instruments. That has brought down the reported PAT at rupees 217 crore. However, if we exclude this exceptional loss, the adjusted PAT is reported at 432 crore, which is versus the expectation of rupees 363 crore. In terms of annual performance, revenue grew by 10% on a YY basis, with EBITDA margin at 15% versus 13.5% in FY23. Also, company's growth business, which includes Tata Sampann, ready to drink, Tata Soulfull, that has posted a growth of 40% in FY24. Currently, we are positive on the stock, where it is trading at a PE of 54 times to FY26 EPS. We will provide further insights post today's con call. Thank you.
Good morning. Yesterday, Tata Elxsi has come out with its results, and the results are below expectations, wherein the revenues were down 0.9% quarter on quarter at 906 crore. And that also affected the margins by 100 basis points Q on Q. This was mainly on account of delay and ramp downs in some of their projects. In the media and communication vertical, there was a slowdown, ramp down from the customer due to a merger happening at their end. Overall, this vertical was flattish in FY24, and the management believes that it has bottomed out and would start seeing growth going forward. In the system integration business as well, the growth was impacted by hardware shipment delays due to the Red Sea shipping crisis. But overall, in FY24, this business grew 19%. In its main transportation business, that business grew 1.2% Q on Q on a constant currency basis, which was quite slow. But management says that the overall slowdown has bottomed out, and they are better prepared to score better deals going forward. And also, one multi-million deal which they had bagged earlier has started to ramp up towards the end of the Q4 quarter. So net long-term outlook remains positive for the company. Thank you.
Yeah, apart from this, one smaller company, Hutatmaki India Limited, a packaging company, has reported the result. The results were a bit soft or declining in the sense that the EBITDA margin has come down. Whereas if you see the gross margin that has sustained the last quarter level, where it has shown good improvement in the last quarter, which has been sustained in this quarter. But due to higher other expenses, the EBITDA margin has decline both quarter on quarter and year on year. There is a quite possibility that there could be some exceptional item in other expenses which has impacted this performance, and that we will come to know once the con call is there on 26th. Apart from that, the revenue growth is in line with FMCG sector and shown some softness. The revenue growth was soft at uh, and had seen some marginal up of around 1.1% Q on Q. Year on year, it's seeing a decline mainly because of the company has restructured its portfolio and had seen some corrections in the low profit making uh, products. So overall seems a declining set of number may see some softness in the near term, but more depend on how the management give clarity on this. But looking at the direction from a long-term perspective, the stock looks positive. That's all from us. Now I'll request commodity team to take up from here.
Yeah. So yesterday we witnessed gold and silver prices rallying from the support area of 70,300 to 79,300 to 79,000 in silver. So today we might see further pullback. So buying on dips in gold around 700 and silver 8,300 is recommended, and maintain a stop loss of 70,300, and in silver maintain the stop loss of 79,500. On upside we are eyeing for 71,400 in gold, and in silver it might test 81,500. So buying on dips in gold and silver is recommended. Copper, we might see a pullback, and buying in a May contract is recommended around 844, and maintain a stop loss of 840. On upside again, it can test 850, 851, whereby some selling pressure is expected, so profit taking is advisable on upside. Zinc 2 might test 251, the May contract, so buying around 249 is recommended, and one should maintain a stop loss of 247. Similarly, crude oil has also recovered from the lows, and the prices are holding the support around 67.50. So buying on dips around 6,900 is recommended, with a stop loss of 68.30. On upside, it can test 7,000 to 7,330 on upside. And natural gas also prices are consolidating but gradually moving up. So buying around 148 is recommended, with a stop loss of 140. On upside, we are eyeing for 157, 160. So that's it from me. I'll ask Utkarsh to take the call forward.
Thank you, sir. Very good morning, all of you. For today's trading session in USD we are expecting some sideways to bullish momentum in the range of 83.20 on the lower end and 83.45 on the higher end. So once prices comes around 83.25 to 83.20 levels, then one can initiate a long positions with a stop loss of 3.18 levels for the target of 83.32 and 83.38 levels. Thank you.